this MACD educational video, we're going to be taking a look at the Dow Jones weekly chart between the time period of 2006 and October 2009. And we're also going to take a look at the BlackBerry 8-year monthly chart to see what we can learn from it. Remember, we are only using the MACD as this is a MACD educational video. So some of the things we're going to be discussing are going to be what happens when stocks are moving higher and you get this crossover above zero. They tend to be strong indications of momentum to the upside. So momentum is always confirmed whenever the MACD crossover takes place above zero. Very important. We're also going to be discussing what happens when markets break MACD trend lines, like in this particular example, the red line. That trend line break was a sell signal. We are also going to see examples of what happens when markets move their MACDs below zero. We are also going to learn about when markets try to recapture the zero line and you have uniform activity above the line or close to the line and a rejection. That tends to be a sell signal. We are going to see the power of crossovers when the MACDs are already trading below zero. We're also going to see that whenever you get a crossover of the MACD, when it's trading below zero, you don't get a very strong push in price to the upside. And we're also going to see uniformity, which is this attempt to move above zero that fails. This is what we're going to learn in this video. So why don't we begin with the Dow weekly chart, and this is a 4-year weekly chart for the Dow Jones, and this is a period that captures the bear market of 2007-2008 into March 2009. So you'll notice that we have this area here in the market where I show the red arrows, and the red arrows are where we broke trend line in the market coming into late 2007. So there was a trend break there, which was a sell signal at that point, which is that level here. Dow trading at that time at about 13,800. There was another trend break, which was a sell signal here, and also a move below zero. So that was coming into November. So another sell signal there, confirmed by the secondary MACD. And notice that we moved below zero here. That was a sell signal in the Dow coming into 2008, which was that major sell signal. So remember, the market had been on a very nice tear to the upside between 2003 and 2007, and you can see that the MACDs were trading above zero at that time. Hope you can see that. So the MACDs during the bull market 2003, late 2007, there were crossovers in the MACD above zero, and those were strong crossovers. Notice that there was also a crossover attempt here in October of 2007 that failed. So signs of weakness were starting to show up in this market. Now we have this break of this trend line here, and notice what happens is the market tries to recapture above zero here, and there's a rejection there December of 2007. So there was signs of market getting tired because it should have been able to recapture that level but was failing. Now let's go back and take a look at what happened. So we have this March 09 lows. So when did the MACD give us indication of strength? A, we had this already broken below this trend here. So remember, crossover once a trend has been broken. So the subsequent crossover after a trend break tends to be a good buy signal. So you see that the market tried to move above this level here, fails, comes down. So what you do, you draw a straight line. Let me see if I can show that properly. So this attempt failed, so you draw a straight line. The next time the market moves above that level, which is here, then that becomes a short-term buy signal. And you can see that that was a good entry point because that would have been about sometime in March, even here, March of 2009. But the best move comes when the market finally clears this MACD highs here, and this goes back to this high from here. We draw that again. So that high there was also this high here. Once the MACD blasts out of that and also moves above 0, that was an indication that something was now changing to the bullish side, and you can see that became a nice entry point there, which also happens to be this breakout in price. So lots of things were taking place at that particular point. There was a good entry point in the market because the MACDs were moving above 0, and you'll notice that this MACD, the secondary MACD, had moved above 0 here, which is this time period here, a nice entry point, and it went higher, and there was an attempt by this MACD to slash back below 0, which would have been a bearish signal, but you see that it bounced off and actually had uniform activity here below the line and back above it, which is what I'm talking about. So that was a nice entry point because this is uniform activity, rejected at 0 line. That's a serious buy signal, which is this low right there. So now this arrow shows again entry points when the market was bullish. Crossovers above 0 were good, and now we see the other side of that, which is whenever you have crossovers when markets are trading, their MACDs below 0 tends to be serious sell signal. Those are crossover here when the MACD was below 0, which is this period here. That was a definite sell signal. Another crossover here, which is this period here before the crash of 2008, serious sell signal. Those are crossover even in this MACD time period here, and a break of a trend here, which was same period here, this time period here before the crash. We had another crossover here, which corresponds with this move to March 09 lows. Now notice that we have positive divergence. We make higher highs in the MACD lows, prices make lower lows over a period of many months, and you also see improving technicals on the MACD. That's why this blast above this MACD area here and a crossover, and also this move above this most recent MACD high here, was a good indication that this positive divergence was gonna push this market to the upside. So now let's go and take a look at the uniform activity. So the market makes a high here in 2007. Notice what had happened before that. You have this uniform activity at this point here. Market had gone up above 0 and down, very uniform. So once you break that trend there, that's a serious sell signal because this shows you that the market was getting tired. And we have another uniform activity in the MACD, which is this time period here, happens to be this high about April, May of 2008. Market went above that and then back below that, and also a break of that trend. So that was another sell signal. So the MACD by itself was really giving us a lot of indication of where the momentum was when the market was bearish. It could have helped investors position themselves correctly. Now let's take a look at the BlackBerry 8-year monthly chart, and I want to focus on why it's still down. Even today we see it down about 17%. Take a look at this MACD level here. Once BlackBerry moved below 0 here, late 2008, early 2009, it's never really recaptured that 0 line. So this instrument has been bearish since then. You can say that there's never been a buy signal since then because all indications have been that the market has stayed below 0 on the MACD, no buy signal. We've only seen bearish crossovers like here in early 2011, bearish crossover below 0, not good. And now notice importantly what is happening here. Look at this MACD rejection at 0, uniform activity above the line, back below, that's bearish. Same thing here, uniform activity above the line and back below it, and also a trend break there. This is when the stock was trading at about $70. Take a look at this move above zero here and a rejection, uniform activity above zero and back below it. That's a bearish development there. Take a look at this crossover below zero and a trend break, another sell signal here. So multiple sell signals, and most recently the stock tried to move back above zero but went above it, uniform activity, and back below it. So that was your most recent MACD sell signal. So we see that by using the MACD correctly, and especially if you can bring other factors, other indicators into play, you get a nice look into what stocks is trying to tell you. So BlackBerry has been in a bear market and continues to be in a bear market. Stock is in trouble because the MACD has yet to give us any buy signal. Eric Mwathe, good luck, peace, and blessings. Woo!